Hello everybody. In the current affairs this week, the week ended 8th of September 2024. Every morning when we open the newspaper, we see a lot of advertisements of new IPOs of equity shares being floated by several companies. At the same time, we hear a lot of news of IPO shares getting listed on the stock exchange, and in most of the cases at a premium. But the fact remains, which has come out of the study of SEBI in respect of IPOs for the period April 2021 to December 2023, is that majority of the IPO shares are sold by the investor who subscribed to it in just 7 days, and 70% of the shares are sold within a period of 1 year. So all those people who are subscribing these shares in IPOs are not structural investors, or they aren't investors who are really looking at the fundamentals of the company but wants to make a quick buck. But the fact remains that all those people who have succeeded in the stock market and have made huge fortunes have been investors who have stood by whatever were their stocks of conviction for not just years but decades together, and have made large money by investing for such a long period of time. So this is something which the investors in the new times need to understand when they subscribe or acquire shares in companies. Coming to the Indian stock markets, the Indian stock markets were on a decline on account of the winds blowing from the US. The Nifty 50 was down by more than 1.5%. Nifty mid cap was down by more than 1%, but Nifty small cap was marginally in the plus territory. The major indices within the broad indices which were down were Nifty PSU banks, which was down by more than 4%. Nifty oil and gas was down by more than 3%, but Nifty FMCG was resilient and was in a mildly positive terrain. As far as the commodity markets are concerned, it was all very positive news for India. The reason for smile was that Brent crude was down from $78 to $71, which was a decline of more than 9% in just 1 week. And on a yearly basis, the decline was more than 21%. India is a major importer of crude, and 80% of its crude is imported. And in a scenario where the prices of crude are on such a sharp decline, it is all positive for India. As far as the US markets were concerned, Nasdaq was down by more than 5% and S&P 500 was down by more than 4%. This was on account of the tech sector going for a decline led by Nvidia. And this decline in the tech sector was triggered by weak economic data. This week, the government released the data for GST collections for the month of August. The net collection of GST for the month of August was on a decline of 9.2%. It declined from 1.65 lakh crores to 1.5 lakh crores. This decline was attributed to the larger amount of refunds which were issued by the GST. But net, the income of the government for this particular month declined, which is a fact. There were 3 different stories which were in respect of the way the EV segment and the way the world is looking at the EV transformation as the means of new age mobility. The news from Europe was that Europe had very tall targets of shifting its complete mobility to EV within a certain period of time. But now they have slowed down and they have paused it. The reason which is attributed is affordability and convenience. At the same time, all the major European governments have reduced their support or subsidies to the EV vehicles. Same is the story coming back out here in India. The Delhi government has moved away from the road tax waiver on EV vehicles, and this has practically stopped the registration of EV vehicles in Delhi. And Delhi constitutes to at least 10% of the EV market across India. So EV was on a decline or a back foot when it comes to the acceptability across major markets, may it be Europe or markets like Delhi in India. At the same time, Toyota Kirloskar Motors in India, which is the major manufacturer of hybrid vehicles, tripled its profits for the year 23-24 on account of sale of hybrid vehicles, which has been very much accepted by the users at large. Lastly, I wanted to talk about corporate pragmatism, which is in vogue in our country. PVR Inox have declared that they will be shutting down 70 screens which they think that they are uneconomical, and they will be starting 120 new screens. So today's corporate India is not shy in reversing something which is not working. The other news is that Suzlon is going to sell its own corporate headquarters and getting it back on lease. So they will be sitting in the same building, but in the process, they will be raising 440 crores to support their core operations, which is for executing a large order book. So they would be selling their headquarters, raising cash, leasing that very building back, and using the funds for the core activity, which is something where money is needed and they don't want to leverage themselves. So this is the kind of pragmatism which is happening in corporate India. This is all for this week. Thank you.